Good morning, traders. It is 8:02 a.m. Chicago time, 9:02 Eastern on Monday, the 9th of July, 2018. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Looking at the overall market stance this morning, very clear risk sentiment, allocations to risk this morning. Although gold is leading the pack up 8.1%, the overall activity is a little bit mixed. The DAX has come off a little bit and is now up 22 points. A lot of news coming through from the UK in the overnight session. The laggard this morning is the US dollar, down 0.28%. The US dollar is trading at 93.51. The other laggards are, of course, the Japanese yen, the Bund, German Bund, the 10-year note, and the U.S. Treasury bond. So clearly, risk sentiment is on. Looking at what is likely to push us around today, there's nothing on the calendar. We have U.S. consumer credit at 3 p.m. For May, expecting 12.0. This number is not expected to be a mover. Other than that, the other events are really related to ECB speakers. We had Nowotny in Zurich this morning. Draghi is currently scheduled to speak as of right now, and also at 11 o'clock Eastern. So keep an eye on that if you're in the Euro and, of course, in the European indices. Let's take a look at what we expected on Friday, which clearly didn't play out. Here's the main expectation. Friday, given that we popped up on the non-farm payrolls and ended up holding at 27.38, we basically came all the way back after pushing 27.47.50, came all the way back to 27.38. If you recall, the scene of the crime on the non-farm payrolls was 27.33.50. And what it looked like to me was there was a decent potential for the market to test up, like you see here in the primary scenario, to test up and then ultimately just sit sideways. So we would extend this week high upwards, but ultimately rest in this 2-day balance where we sold off one day and then took it all back the next day. Clearly, that did not happen. What actually happened is very much a strong uptrend day with minor counter rotations. So as we pull this back here, let's clean this up. So as we pull this back here, we ended up opening in the same spot, 27.38. 27.38.75, expected 27.38.50, right on the edge of Thursday's upper range on this really fugly high, this very, very poor high, which again, scenario one expected that this would be tested up and then we would likely come down. So what was important, and these stock zones reflect today's stock zones versus Friday's, what was important is a test of the 45.75 area and failure. I did take the look for the short up here. Clearly that didn't work out. Ended up stopping out back there. The greatest opportunity of the day was actually the well, let's start from the beginning. What we had is an open auction with a downward skew. So we had an auction that ended up pushing all the way out, but it ended up being responsive down to 34.50. Again, the SOC for non-farm payrolls is 33.50. Didn't quite get there, and then we had an impulse up and a continuation. And what we got as the really, if you could see it at the time, the most important setup is right there, mid against the open against the prior high on a pullback after an impulse. That's a setup for me for a continuation, and that's one you would have to hang on to. But the big obstacle here was 27.45.50, 46, as I said. Didn't see this opportunity, saw this opportunity, saw about 3 points of favorable excursion before it started to drift up. And once it started to drift up, uh, as many of you already know, not I'm not really a breakout trader. I'm not interested in breakouts, and trends are not my thing. So generally, I look elsewhere for opportunity, or I wait for pullbacks towards the mid, towards the point of control, or some other area, stock zone confluence, things like that, to start to trade with the trend, which did not happen. We ended up pushing all the way up to 2763.50. We found balance in this area. You could see that prices pushed high enough to motivate sellers, and we ended up with this very sharp point of control at 2762.50. Okay, the key target above, if I had gone through that scenario, the key target above was 2767. This comes back from comes to us from June 22nd, I believe. And so what we ended up with yesterday is a P-shaped profile, right? P-shaped profile, which is a short covering. It indicates a pretty good short covering. You can see that there's a quite a thin profile below here, and we had pushed high enough to find balance. The range was pretty good. The range was 32 points. The volume was a little low, 983,000 versus 1.1 million common. But overall, we do expect volume to be slightly lower on trend up days. The delta did move up with price, and did concur with price. So overall, pretty solid performance by the buyers, and they got rewarded for it. I want to step back for a minute, and I want you to take a look at this chart. This is a composite. I want to take a moment to just talk about the bigger picture narrative. Okay, the narrative is very, very important to our trading, in that it gives us the background or the story that goes with what price is showing. And the story is based on price and how volume participated in that price. And what we see in this narrative is going all the way back into May. We had this fairly long period of balance into the beginning of June, into the 1st of June, basically, or the 4th of June, the beginning of June. Then we broke up, we broke higher, and then we pushed this 2796. Okay, and then we balanced out. We ended up with an inside day, completely balanced on June 25th or 22nd, I believe. Yeah, June 22nd. That's the day we're templating currently, or we were templating Friday, and then we had this gap down and sell on June 25th. At which point we consolidated sideways for about a week and a half, and then on Friday we broke back through and built our point of control right on top of where we had it on June 22nd. So what we've done is we've ping-ponged from lower distribution to upper distribution to lower distribution, and now we're back in the upper distribution. So if we put a profile on this whole thing from the gap day, you'll see that, let me get rid of this stuff here and switch to a different color. Let's go with white. White. And also let's kill these boxes. Don't need them right now. So a lot of trading occurred. Remember 27, 45, 50, this is where it comes from, right here, right there. So right there, right there, right there. It also goes way back, right there, right there, retest, retest. That's where it comes from. And that is your key low volume node in the area. And below there is this big distribution of balance. That's where we were. We were trading this distribution balance, and what does that result in? It results in sell off inside day, push higher and sell off, extend, push higher, pull back in the middle, and then finally breaking out on Friday. Big balance zone balance causes that back and forth or feeds into that back and forth. That balance comes to us from May, from the entire month of May, basically. And now we've pushed into this profile. So now we're paying attention to what this profile is showing. What this profile is showing is the most traded price up here is 27.75. I believe it's 27.75.75 from memory, but we don't need memory because we've got data, right? So that's 27.75.50. I was off by a tick. And note that this profile here is very boxy. Okay, what does a boxy profile mean? A boxy profile tells us what is up here. Oh, let's go back here. What does a boxy profile say? It says that there's a lack of consensus, there's no agreement on price, and so that's the zone we're coming back into. So if you look at this profile, pretty jagged. One distribution with a cutoff here at 27.80, big low volume node. Then we have the next distribution, which has the 75.50 point of control, which is our target for today. We're almost there. We have another distribution with a cutoff down here, and another distribution, and another distribution. So very boxy profile as opposed to a profile that shows rejection on the extreme, acceptance in the middle, rejection on the extreme, and then we have a very clear value area somewhere in the middle. This is just classic statistics, right? Gaussian distributions and so on. And that's what we're coming into today. So I'm expecting the trade going in this area. I'm expecting the trade to be somewhat frantic, although today I'm expecting it to be somewhat quiet. Given that it's traditionally Monday after non-farm payrolls, especially in the summer, not expecting a lot of participation in volume, but we are opening out of range. So we're coming into an imbalance right away. Again, last night was packed full of news between China, between the U.S. President Trump's tweets and UK stuff. It's just there's a lot to cover there. Obviously, you can just look that up online. But what we have is a market that is likely to provide us with key areas to test as we explore these prices, these disagreed upon prices from the past as we push to near 2,800 on the high. So just be aware of that on the big picture. So I spent a lot of time going over that because you need to understand the narrative, and the narrative is we're in this turbulent area with a strong push from buyers. Oh, one last thing. Look at the performance of buyers over the last couple of days. So here's a buy bar right here, and this is a buy bar from Friday. And you could see that with higher prices, volume increased. With higher prices, range increased down here. Okay, so this white bar means it's bigger than the bar before it. And that's pretty good. That bodes well for buyers. It means there is a lot of participation, a lot of short covering. We've had pretty active short selling since the end of June. The end of June, well, throughout June, we saw some pretty active delta shorts, delta selling, pretty much on every session. And so we're coming out of that with buyers squeezing those guys out pretty good now. We filled in the gap zone from the 25th, and so here we are. So what am I expecting today so we can wrap up? This morning, shift this up. This morning we ended up with a point of control near highs on a trend day up, expecting would normally expect that to extend out. We would expect that to extend out in the Globex session, which it did. So we're opening in an open we're opening out of range, as I'd mentioned. The expectation this morning is a relatively quiet open sideways. I'm looking for it to drift lower. I'm looking for the market to we either leave a gap zone open, which is what we've done lately. We just leave a gap zone open, but I expect a drift down. I'm looking for an impulse into the 75.50. I expect it to get tangled in the 75.50 and then eventually get to that MCLVN at 27.80 for scenario one. Scenario one is responsive early, initiative later, with a cap at 27.80, giving us about 12 to 13 points of range is what I'm expecting. Okay, the secondary scenario. Secondary scenario, if we see initiative buying right off the get-go, likely to tangle up again at the MC point of control, continue to push higher. At some point, I'm looking for it to traverse or cut across the opening swing that's formed this morning, pull back, and then start to work its way back to the high of the prior day. The extended target on scenario 2 is 27.6250 before the bounce. That's scenario 2. Scenario 3 is an open test drive responsive, which is lower. Yes, 27.80 is an MCLVN. That's the key here. Scenario 3 is expected to be an open test drive lower, so responsive selling, so a push lower. And if it does do that, we're looking at probably somewhere around 27.52 for a target. Once it clears here, it's got quite a bit of room to go before it's likely to find buyers. And then scenario 4 is open test drive initiative, meaning opens, pulls down, and then starts to drive higher. And then from there, we're looking at 27.88 and a quarter as a target. Those are driving behaviors, but that's not expected. That's a low expectation. The higher expectation is what you see in front of your screen. I hope this helps you set up your day. Just remember, trade with the narrative in mind. Trade with the story. Look back, and if you something that I've found useful in the past is I go back and play a 15-minute chart. If it's a lot of days, play a 15-minute chart bar by bar and tell yourself, narrate to yourself. It's great to record too. Narrate to yourself what the market did and why you think the narrative is what you say. Once you understand the narrative, it becomes a lot easier to hold on to trades that you would otherwise close out of fear. It's just a very basic exercise for prop traders that I'm giving you here. It's very, very important to your development. Look, when you're swinging 50 lots, 100 lots, 200 lots, 300 lots, the narrative is your friend. The narrative is what backs you up and gives you confidence to hold on while the market's just sitting sideways. All right? Good luck today, and I'll catch you tomorrow morning. Take care.